Good morning, everybody. A little bit early start for me, but might as well. Might as well. Tuesdays are usually a bit of a poor day, I've noticed of recent, and so I wouldn't be expecting an enormous amount of upside price action. However, we have sank from that $70,000 top, which was front running my particular target. We actually lost 6% on Bitcoin, very fast, in fact. Over the last 24 hours, 6%. Very impressive pullback there. And with the size of a move like that, I probably would expect continuation a little further down. But by saying that, if you just revisit the daily, currently, we're above all moving averages. So that move up yesterday to 70,000, and then that big rejection from it, only got pulled back down to the 10 exponential moving average, which is a support. It's definitely a support that you might consider to be worthy of taking if you were particularly bullish on Bitcoin or on any chart. I mean, this is the way moving averages are really. It's all to do with your risk tolerance and how bullish you are. If you're bullish in an uptrend and you get a pullback to the 10 exponential, you give it a shot. Doesn't mean that there can't be a wick down to a 21 or a 10 or to a 50 or a 20. But if you were bullish, you would say, go on then, let's have a little go. Bang, all right, saw the wick, but then up to 70,000. Yesterday, again, it pulled back into the 10. It is currently a high and a higher low. And the wick, the wick came down to just below 66,000. And at the moment, we don't really know if we can sustain this price or come back down further. Perhaps maybe to the bottom of this area, 65,300, maybe a little lower. But, the simple fact is, we're above all moving averages for the most part. They are more or less getting into position for a continuous trend. And the Itchy Cloud did develop a pump signal. You could make the case that pump signal played, and it was front run to the tune of 70,000. Personally, I was looking for a major top before another pullback around about 71,500, where you had all these wicks and candle bodies. So I'll be looking for that, and that is still definitely on the cards. We could still be seeing that. You could even see that today. It's just that Tuesday being Tuesday, and then tomorrow being a Fed decision. I think always generally, the best thing to be is guarded when it comes into these. Not the fact that it's Tuesday, but tomorrow with the Fed decision, usually a guarded position. There's no need to be overexposed. And look, you always have to consider what you're going to do with your life if you're buying Bitcoin when it approaches major resistances anyway. So this is a support. There's a support down here, and I think this is probably more likely to see a better reaction between 65,300 and 64,800. So around this area with these major moving averages such as the 21 and the 20, and obviously this horizontal being the bottom of this box. If we go over to the daily, though, and just look at the momentum, we do have bearish divergence, so just two drives, a single one here and another one here. We are turning down on the MACD as well, which might mean that we do sort of trail down a little further. And then you've got to think about what's the traditional market situation. The traditional markets, with the S&P 500, this is the futures market, whoopsie-doo. This is the futures market. We're below most moving averages on this one on the daily. We've got some hidden bullish divergence. It's not, for me, hidden bull and hidden bear. It's never really, it's never that strong for the most part. I would never really go too crazy on hidden bullish or bearish divergences, but we do have it, so maybe a bounce could take place on the S&P, but at the moment it's just a series of lower highs, lower lows on the daily, and until we reclaim areas like 5,550 back above that 20 moving average, this is an area of rejection. So if we did move up, and again, yesterday 50 exponential, today 50 exponential, if we do see a push back up, I would expect a rejection from there anyway. We'll take it to a 4 hour to see what's going on the 4 hourly. 4 hourly has reclaimed the Bollinger Band so far. Rejection on the 200. So, there is a battle going on the 4 hourly to see if we can get back above these areas. We've got a 4 hourly death cross on simple moving averages. Exponential is probably going to complete at some point, maybe by the looks of things at this trajectory tomorrow. That would, not confirm, but strengthen a downtrend, making it harder for it to break out from there. So just think about that. before making any decisions on long or any before being particularly bullish anyway. Just remember that. So looking over at the Dixie. The Dixie's managed to sort of move its way back above this trend line, this 104.23. Rejection on a death cross retest, that's a 200 exponential. We're surfing a 4-hourly 7 simple, so I think it's likely to see a move back up to 104.7 again, maybe get another rejection. Bearish divergence, regular bearish divergence on that as well. And if we just move it over to the daily to see what the daily looks like, the daily has so far managed to get back above this 20 moving average, but it's very steep in its trajectory. So it doesn't mean that by staying above there isn't immediately bullish. The laws of moving averages with Bollinger Band strategy is that you're 65% more likely to remain above or below the 20 moving average, but to the tune of, like I say, 65%. So at the moment we're above it, but we are below the 21 and the 20, the 20 simple and the 21. The reason I have both of them there is that they act in a similar way. So we are still below the 21, but we are now above the 20. So look, it's a rock and a hard place. It's not a very good setup either. For Dixie, for saying it's gonna do this or it's gonna do that. It might be a day that we just sit back and chill really, and allow for price action to tell us with a bit more conviction over the next, probably I'd say after Wednesday really, the next 48 hours, get the Fed decision out of the way and just leave price action to sort of respond accordingly. Because there's been a few bits of craziness going on, hasn't there, really, recently, especially in crypto. With that Bitcoin conference, it was up and down and up and down. It was all over the place, really. And normally when you have sort of anything like that that sort of pumps or dumps a market, it takes a little bit of the validity out of the chart. Because effectively it's been manipulated in a way. I mean, that is a strong word to say, but price action responding not so much to the chart, but to something someone says or does. And so you look at that and go, well, yeah, I mean, that I didn't know that was going to happen on the chart because I didn't know the words that were going to come out of somebody's mouth, or I didn't know the actions of somebody, or an organisation, or in some cases, a government. We had Germany, didn't we, selling Bitcoin. Now we've got the US government moving Bitcoins around. I don't know what their plan is, but these sort of things do have an effect on price action that's not particularly predictable or present on the chart. So you always have to respect that. And it's always one of those things I always say on the Patreon. We look at a chart sometimes, and the chart, let's just say the chart is a Bitcoin chart or just any old chart really, and it's just going like this, and then suddenly it just goes whoa, straight up to the moon. I'd say, look, I don't know why it did that. There's no reason for a chart to suddenly move up 200% in an hour. It's very likely that something or someone has done or said something that is not present on this chart. So you always have to go check, X, or find out why it did that, because there's no reason for a chart to either massively pump or massively dump just out of the blue. Because the chart doesn't tell us that, and I trade charts. The technical analysis is how I make money out of these charts, and that if the chart doesn't, if the move isn't present on the chart before or after, you just have to stand back and go, something must have happened. Someone did or said something. It's pumped or it's dumped, but it wasn't to do with the technicals. So yeah, the technicals could have been relatively bullish, and that only accentuated the move, or obviously bearish, which accentuated the move down. But yeah, you just got to respect that. So we're going to have a 48-hour period where those sort of moves can happen, which takes away some of the power of the technicals really, and it's okay to admit that and accept that, because that is life. Do you know what I mean? It's like driving a car. You could be the safest driver in the world, like me, nice, boring, safe driver, but you can still have a car crash because a maniac is out on the road, and that's sort of a bit like what can happen in the markets. You can be a nice, safe, technical trader, but then a maniac will do something and the chart will just respond to the maniac, and let's face it, there's some maniacs going to be doing some talking over the next 36 to 48 hours. So do you want to get on the road with maniacs. Not for me. I don't want to be driving around with maniacs. But if we are to look at the chart, just to, finish it off here. If we are to look at the chart, currently, as of this very moment in time, 6 o'clock, we are above the 10 exponential moving average, the 21, the bottom of the horizontal, the 20, the 10. In fact, we're above all moving averages apart from the 7 simple, which at this point isn't really, it's not a very good moving average. But anyways, I only really have it when things go parabolic or they die, because it's usually the last moving average to get tagged before the blow off top or the finding a bottom, really. So let's just sit and chill and watch and wait. There's opportunities in the market, certainly, and if we do come down lower, then there will be opportunities. If for whatever reason we do start to lose areas on this chart, such as this 65,000, we should be coming below, or coming to or below 60, which is another $5,000 drop. And I'll probably be I'll be up for suggesting a lower low form, really. And it's okay to say that, and still be bullish, because look at this. This is very bullish. But the S&P, the Dixie, and everybody else is going to be reacting, I think, positively or negatively to what people say in that meeting tomorrow. And I, for one, would rather just stand on the sidelines and wait for the dust to settle, because it's not a particularly appealing trading environment when those sort of things happen. Normally, I think the trend is the main precursor to what they're going to say. So if we're going to be pulling back, maybe the Fed are going to be uninspiring in their words and decisions, and all we'll see is a continuation of the trend. So anyway, it's been fine. It's been a decent little run. We had our alt rally, like we said, and I think if we're judging this just very briefly on the Bitcoin dominance chart, there is a pullback, and we could still see further pullbacks. But I think we should just continue with our general expectations of the crypto market, which is one of accumulation within this area for altcoins. Bitcoin can do what it wants, but accumulation within this area, and once this area has been fully fleshed out, some point later on this year, maybe the fourth quarter, certainly into next year, we see a breakout into new highs. So day-to-day price action at the moment, not very inspiring. Higher term timeframes, absolutely epic opportunities presenting themselves currently, and will continue to emerge probably over the next few months. We are not late to the party. In fact, we're too early, if anything. And you've been to a party when you're like one of the first people there. It's rubbish, and that's what it is like now. So it's rubbish. There's hardly anyone here. Just got to wait. We've got to wait. We're too early. Anyway, I'll leave it with you there. Thanks for watching. Hopefully, I'll see you on the Patreon live stream tonight. Otherwise, hope you have a nice day. Take it easy.